All right, good afternoon, everybody. What's going on? What's going on? All right, I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are in place through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Bill, you got a symbol for that name? Or is that the symbol? Can't check until I have the disclosure up enough. Yeah. Position disclosure update. I kept some of that affirm short, even though I will openly admit that I should not be in it. I am somewhat on tilt with the position, and that's it. But keeping it overnight was somewhat of a rational decision. I want to have more short exposure into where we bounce to with the market, which I can talk about in a minute. Let's take a look at Tesla. Tesla trading up 12 bucks or so from where it closed, 11 bucks, up 10% right now. The numbers looked terrible. Let me scroll up. Q1 adjusted EPS 45 cents versus 52 cents. Solid miss. Tesla still sees notably lower volume growth rate for 2024. I guess that's not necessarily new. Experienced a lot of challenges. Q1 revenue 21.3 billion versus estimates of 22.3 billion. That's a nice miss. Bunch of headlines, new vehicles including more affordable models. Global EV sales continue to be under pressure as many car makers prioritize hybrids over EVs. Scrolling through here for what I think might be important. They're working on ride-hailing functionality with their software. Q1 operating income is a nice nasty miss. 1.17 billion versus estimates of 1.53 billion. They remain committed to company-wide cost reduction. This one's real nasty. Tesla Q1 negative free cash flow 2.53 billion versus estimates of positive 650 million or so. That number is really nasty. And Tesla used to move on that free cash flow number. At a previous earnings season in the past, Tesla would get smoked on that free cash flow number alone. Product update may lead to less cost cuts than expected. Future vehicle lineup to accelerate launch of new models ahead of previously communicated start of production in the second half. Artificial intelligence software and hardware will continue to increase our core AI infrastructure capacity. Throwing out the keywords, artificial intelligence. We produced over 1,000 Cybertrucks in a single week. Yeah, I'm seeing Brant's comments here about it just seems like they're throwing a bunch of stuff at the wall, hoping that something sticks. I mean, I think that's what's been going on for a couple months now with Tesla. They've just been coming out. Elon Musk has been saying just kind of random things. It seems like sometimes just to try to pop the stock, and it'll work. It'll work sometimes for a couple of days, but then it rolls over just because the core of the business is declining significantly. And the thing, even at these prices, trades at an insane valuation. So yeah, I mean, we're moving higher in Tesla right now on terrible numbers, but this is what I talk about when it comes to earnings all the time. I'm not surprised to see it because all the time in earnings season, if a stock has moved up a ton into the report and that report is good, they'll sell it off. Or if the stock has really just gotten destroyed into a report and that report is okay, in this case, I think the report's bad, but the report is just okay. Sometimes they'll rip it higher. I think that's just what's going on here. You've got the fact that the stock has gotten absolutely pummeled this year into this report. I mean, this thing has moved down from $250 to $140 in a market environment where the NASDAQ, which it's in and is a decently large component because of its large market cap, has, given overall a really big up move over the course of the year, especially from lows to highs, and Tesla just did nothing but sell into it. And now it comes out with these terrible numbers. I think I had also seen that the short float in Tesla was the highest it's been in, I don't remember exactly, X amount of years, several years, I think. So I really think that that's what it's about here. We're getting a pop in Tesla on bad numbers. I think that this thing is shortable into any pop. A retest of 160 would be a level that I would potentially look at to short. I think the after hours high here is like 157-ish. I'm seeing 157.36 on the first 5-minute bar. Would not be surprised to see this thing red tomorrow. But I also would not be surprised to see it hold up and give an oversold bounce and squeeze out some shorts a little bit. But that, I think, is just an opportunity to potentially short into. And right before we started the meeting, Robo was asking, do I think that Netflix earnings did some of the dirty work to get expectations so low? Not with Tesla. I think the fact that, so go over to some charts here. We have had a multiple contraction in the market from a fundamental perspective over the course of the month of April. Some of that has occurred, during this Netflix report. So I think that, and this is probably a good thing, some of these other mega cap tech stocks that are going to be reporting earnings this week and next week will have a little bit of a lower bar to get through on the earnings report just because the price is contracted a little bit going into it. Obviously, Google, which I think is tomorrow, still has a very elevated price compared to where it's been. That's all I'm doing is comparing to where it's been previously. Not saying anything, fundamentally. Meta's pulled back a little bit from 530 to 500, helps a bit, but it's nothing huge. And I think that it's just been the market broadly, and part of that market itself has included Netflix a few days ago, where I thought the Netflix numbers were pretty good, but it was almost the opposite situation here. The Netflix numbers were pretty good, but the stock had a huge run into it, and the market didn't like that they got rid of, I think, their subscriber growth numbers in the report, and probably rightfully hit it down a little bit on that, even though the report itself was pretty good. Kind of the opposite of Netflix, really strong stock into the report. Report's a good report, but doesn't knock your socks off and they sell it down. Tesla, I really don't think that Tesla is trading higher because of the market pullback or because of the Netflix report. I think Tesla's in its complete and utter own universe right now. It doesn't seem like Tesla movements impact anything else out there except for maybe other electric vehicle companies, and to some degree whatever weight it has on the S&P as this thing has declined throughout the year. So I really think Tesla's in a total universe of its own at this point. I don't think that the Tesla earnings report, what the numbers look like or what the result is from the stock post the report, have any impact on what any of the other big cap stocks are going to do here. So that's my thought process on it. So we'll see how it trades. You're not seeing any guidance numbers from Tesla yet. I don't know if that comes out during the report, during the conference call, I mean. So I'd be a little bit patient on, part of me, even at 155, wanted to just jump the gun and press the short button, but I'll wait. There's no point in rushing back into this thing for me after getting pushed out at $180 right after it just got to my target of 140 yesterday for the first time. Let's wait. I'll wait and see what the guidance looks like, wait and see what the reaction looks like, but as of right now, if nothing new changes in the conference call, I certainly have an interest in potentially shorting this thing in that 160 area that it broke down from on a retest of that. But let's let the dust settle, I think, a little bit on this one. We also had Visa. Visa's up. That's good. I didn't even look at the numbers. Let me scroll up and find it. So Visa, I always feel like is low key, secretly, like people don't realize one of the biggest companies in the market. So this is actually a really important company overall for the S&P. They're huge. Visa second quarter net revenue 8.78 billion versus estimates of 8.62 billion. Second quarter adjusted EPS also a nice beat. Total Visa processed transactions is a nice beat, 55.5 billion versus 54.9 billion. So Visa numbers are looking good. Stock is trading up on the report. All right, so that's kind of where we're at with earnings here for the moment. We can keep an eye on this Tesla. Let's talk about the market. So the market had a really nice continuation bounce back today. So at the end of the day here, including any after-hours price action, any effect that's happening from Tesla, which looks like we got the market up a little bit after hours because of that. SPYs are up 1.25%, so 1.25%. Nice day. Q's up 1.73%. That includes a nice bounce here from the closing print of almost $1 off of Tesla here initially. And IWM also very nice, up 1.6%. So we had a really strong market day today. We had continuation to the upside. It was absolutely helped by that PMI number that came out at 9:45. So manufacturing PMI flash actual was 49.4 versus forecast of 52. Services PMI was 50.9 versus a forecast of 52. And composite PMI flash was 50.9 versus expectations of 52. So a really solid miss on PMI to the point where, and we talked about this in yesterday's afternoon meeting off of a question that somebody had asked me, to the point where it missed by so much that I would almost be concerned about the market getting concerned about an economic slowdown. Which is kind of what somebody asked a question in yesterday's afternoon meeting about my expectations for PMI. And again, I usually do my economic number research in the morning of the day of any number that gets reported. But my broad thought process is that like an inline number would probably be the best thing for the market, because if it comes in really hot, yeah, you got a super strong economy, but you've got an inflation problem. If it comes in really weak, well, your inflation problem is going away, but you have an economy problem. And to me, this seems like a borderline number of the latter situation that I'm discussing, where it's like, yeah, obviously the market ripped higher today at 9:45 on this weak PMI because that point's great for this inflation slowdown, which has kind of reared its ugly head again with this pullback that the market has experienced during the course of April. But to me, I don't like that manufacturing number coming in below 50, which indicates contraction. I know it's 49.9. I don't want to overread a tenth of a penny. And again, I missed by a little bit, like the services number coming in at 50.9 instead of 52. That's actually probably a sweet spot number, because you do still have growth, but it's less than expectations. So you have growth, but the potential of reduced inflation. The manufacturing number was like almost borderline scary, where it's an economic issue, but obviously the market interpreted that very nicely. So we got great continuation throughout today's trading session. We got a nice boost here at 9:45 that seemed like it triggered us to get above yesterday's high and kind of continue this upside grind. So we had discussed in the morning meeting today, obviously prior to the 9:45 number coming out, that the SPYs and the the SPYs and the IWM as of yesterday's high had basically fulfilled their downside extension, gotten to the ADMA on the daily chart. And then we had a little bit of a gap up this morning, but it was a gap up that was still beneath yesterday's high. So if you wanted to be really aggressive on the short side of the market, you could have tried to short the beginning of the day today. You could have tried to short the open versus yesterday's high, but to keep it tight. And I didn't think that aggressive short at least, had time frame continuity, because the Qs were still extended to the downside. So if the Qs wanted to bounce back to their ADMA, which turns out that's exactly what happened today, and get to their equilibrium area, which also makes sense, then you're probably seeing the SPYs and the IWM, unless they're very relatively weak, move through that ADMA and get deeper into that equilibrium zone. So I think the number that I said, and just kind of an estimate of like a midpoint number between the 8 and 21 EMA, was that in that the 505 area for the SPYs, you might be getting to the point, because there's also some resistance there at 505, you might be getting to the point where it is worth it to, at that spot, look for shorts. And that you could go for the aggressive short right off the open versus yesterday's high, because it's a gap up, and gap ups have been continuously sold recently. You have an okay risk reward versus yesterday's high, shorting this morning's gap up. But that wasn't my preferred trade. My preferred trade would be to wait for a bigger bounce, wait for the Qs to get to the ADMA, wait for the SPYs maybe to get to that 505 area, and then potentially look for the short. And the market obviously helped by the economic number at 945 today, was able to get a great boost, able to get a great continuation. But the bulls have not fully regained control at this point as far as I'm concerned. All that's happened is we have achieved equilibrium now, technical equilibrium for the market for every index. The SPYs are between the 8 and 21 EMA. The IWM almost got to that 21 EMA, almost even gave a retest of that key $200 level. And the Qs snapped back just to that 8 EMA basically today. And for me, I can talk about a firm in a second if you guys want to torture me a little bit. But for me, my game plan and my thought process was, all right, let's be patient on the short. Let's look for that deeper bounce. Let's ride the longs that I have on. I have been looking for the last several trading sessions now. I've been looking for the market to really bounce the long duration names, the most oversold stocks, especially if I could get any little bit of a move lower in interest rates, which I certainly got intraday today when that PMI hit and you saw the TLT rip. So I kind of got, in some ways, exactly what I was looking for as far as the bounce goes, and I had a great P&L day overall, despite being more frustrated in today's trading session because of one particular stock than I've been probably almost any time this month. Any time this year, 2024 so far. But again, the plan was, let's be patient on the short side. Let's see us get into equilibrium, and then when we're deeper into equilibrium, when the ADMA catches up with the Qs, then maybe it makes more sense to lighten up a little bit more on those longs and maybe enter some shorts. Could the market V-bottom here? I said the same thing yesterday. I said the same thing this morning. Absolutely, it could. It's not something that I want to bet on, and definitely also could with the help of a bunch of earnings reports this week. But it's not something I technically want to bet on right now, when we also know that we still have some forced selling that's coming from CTAs and certain parts of the market. With that said, I think it's a little bit of a balance of forced selling that we know is coming in from CTAs versus buying that's coming in from this VIX getting crushed back down. VIX back below 16, and that's a huge move here over the course of the last several trading days, which reinvigorates, I think, some animal spirits. But again, from a technical perspective, we're now finally bounced into the area where today, tomorrow, could we move another $1 or $2 higher in the SPYs? We could, especially because the Qs still have room to move deeper into their equilibrium area. Could we move a little bit higher in the market? We could, but this is the area now where bears, if they're going to maintain any control, should take a stand. And I really, my thought process, which definitely could be wrong, would be that even if bulls fully regain control and we work our way back to all-time highs, that they don't do it with a V-bottom. So my thought process is that even if the bulls big picture regain some control, and the low that we saw 2 trading sessions ago happens to be an absolute low, that the bulls regain control after a higher low, which still means that there will be a attempt at a lower high from bears. So that's what I'm looking for in this area. But I think overall, we did as a team a fantastic job just saying, like, yeah, again, the aggressive short is you could have shorted the gap up this morning versus yesterday's high. The better short is let's be patient. Let's ride those longs a little bit longer. Let's get deeper in the equilibrium area. Let's let the Qs catch up to the ADMA on the daily chart. And then we can begin to see if we actually get short setups or not to come into the market. And I know for myself on my better trading today, when I eventually did short some T triple Q today, or some QQQ you could look at. I basically waited till 2 o'clock. So the market had given this entire move. The Qs were now touching the ADMA on the daily chart. The SPYs were deeper into that equilibrium, and then it's like, okay, you know what? I do still have longs on. I'm going to keep those longs on. Like I've been saying, there is a potential of bulls to regain control here. And if you're in a win-win situation with your swing positions or your longer hold positions, let the reward maximization occur if the bulls want to regain that control. But here is also now at the point where if you're heavy enough, it makes sense to book some profit, or to maybe hedge yourself by looking for some short trades at the same time. So, waited till basically 2 o'clock to finally build in a little bit on some T triple Q, made a few bucks in it. I was very tempted to keep small T triple Q into the close. A little bit glad, obviously, I didn't, because Tesla's moving it higher, but it's not really the point. The main reason I didn't was because I was deciding that I was going to keep some of that Affirm disaster trade that I had today to the short side, because I do want some short exposure on the books with where the market just got to after this bounce. It's not the right thing to do. I should not be. I'm keeping. It's a little bit of a frustrating day because I had like a really nice P&L day today, but I have like a pretty nasty open P&L loss in Affirm right now. I just got totally screwed in the position. But it hit the point into the close where it's like, man, I kind of want some short exposure on in my books, and I feel like I might be able to trade my way out of this Affirm a little bit. So I'm going to keep the position overnight, even if it's against me. And all the other exposure I have is basically to the long side of the market anyway. And a lot of that is in long duration growth. So if that type of stuff continues to rally, I'll be okay, even if I have this thing on my records, on my books here, hurting my P&L a little bit. So that was really frustrating. I'm happy to talk about it. I mean, I just got totally screwed in this Affirm. There's also part of the danger of getting involved in trades pre-market. You can't have stops out. Part of the danger of being someone who does a morning meeting for a team every day is that it's difficult to manage your positions in the 28 minutes while the morning meeting is actually occurring. No excuses though. You always need to manage your trades, and the fault on being down as much P&L in this Affirm is no one's but mine. But I read that news in Affirm this morning. I didn't realize that it wasn't new news. It was reported, I think, as if it was new news, and the stock was reacting as if it was new news. So in the news, by the way, that came out was that Walmart was getting involved in the buy now, pay later business, and the stock was down 8% on it, and $30 is a really big support level. And I don't really think it's a great company anyway, especially as more competition begins to enter the space. So I was like, oh, this is a this is a thanks, Brant. This is a breakaway gap to the downside in a company that I really don't think is a good company that's trading on bad news. This is great. Let me short some. And really the level to short versus was 30, but the gap was so big, like I said in the morning meeting, as I was explaining the trade before the news hit, I feel like I need to probably give it a little bit more space. So in my head, I was thinking like probably the 30, 50-ish area was the space that I was going to give it to. And I had, at the time in which I was explaining the trade in the morning meeting, which again, we do the morning meeting between 9 and 9:30, so it was before the news hit, I had what I described as a medium-sized position on, but I also had offers out to get a lot heavier. And then all of a sudden the stock just rips. And the reason is because I think it was Mizuho reported that the news that was trading Affirm down is not new news that already existed. And on top of that, today happens to be the day that I was looking for the last several trading sessions, where these long duration growth stocks actually happen to be their most relatively strong. So I just kind of got double whammy hurt on that. The news being negated, and stocks like this happening to be very relatively strong, and I had offers out. So I got lit up on offers at, pretty much all in front of where I was planning on trading my risk to. So I got lit up on some offers at $30, at 30 quarter, at 30.50, And you know, I'm trying to do the meeting again. No excuses. My own deal. I got to manage my positions, and then you know, as you can see here, is a very fast move, and you can't have stop out pre-market. Next thing I know, because I got lit up on all those offers, I've got a pretty heavy position on from a terrible price, and the stock is trading above 32. And it's like, oh, gosh darn it. You know, what do I do here? So, you know, kind of just decided to manage the position a little bit, to try to trade my way out of it a little bit as best I could. I took a pretty big ad at a good price right at the open on this spike bar here at the opening candle. I got highs 32.39. I got like 32 quarter-ish on that, 32.30. Yeah, they were not. And then I got a great cover on the downside here. This low is 31.42. I covered most of that 31.50, so that was like a nice little chop to restore some P&L. I caught 80 cents real quick on some size, liquidated that, and then recognized that, you know, inside 5 and up, or shooter and up, 2 inside 5s in a row. So reshorted small, didn't stop myself out still. You got some resistance at this thing around $33 on the daily chart. And then, you know, by that point, the market's so strong, the market's beginning to work its way into the area where I want to have some shorts on the books anyway. So I'm not trying to offer up any I don't know excuses or you know, try to say I did a good job when I definitely didn't. I did a bad job, and I probably, you know, if a trader was, if one of you guys was asking me my opinion on what the right thing to do is on this trade, given what my P&L is on it, looking at this thing in a vacuum, given how well it closed with a real nice, almost engulfing Maribozu here into the 21 EMA, given that it is closing $2.50 above the approximate area I wanted to stop myself out on, the advice I probably would give you is to liquidate your position, lick your wounds, take your loss, and move on. You know, it's one of those things. It's hard sometimes to be in my position as a trader, where, you know, you guys can see all my positions and everything in real time. There's no hiding any of that. It's in my disclosures, and I always want to be really honest on what I think in any given situation the right thing is to do and what I'm actually doing. Because while most of the time I like to think the right thing to do on anything is what I am actually doing, there are definitely times where, you know, being totally honest, I don't do what the right thing is, as I would, you know, advise a trader who is asking me for an opinion in a similar situation. I do think that while I was certainly on tilt in this position at a certain point this morning, I'm not into the close, and made a conscious decision to keep the position and try to work the position, because, very specifically, because I do want, as I was saying, to have some short exposure on my books as we get back into this technical equilibrium area for the market. Outside of this, I'm very long. I did have TQQQ short into the close, and I could have kept that. My position in TQQQ was not very big. It was pretty small, giving room to build in, and you know, I made some money on it and kind of closed the position into the close, especially in front of the Tesla report. I should really make sure I know when the Affirm earnings are, because as I'm saying this out loud, I have no idea when the report is, and I certainly do not want to accidentally hold this into the earnings report, given my current size and the amount that I'm out of the money in the position. But I decided, you know, instead of keeping a small TQQQ position short, which I have room to build into higher on the way up if the market rallies further into this equilibrium zone, instead of keeping that small TQQQ position to the short side, what I'll do is I'll keep my larger Affirm position on for more of the same. Thanks, Tate. So I got some room here, May 8th. I'll keep this Affirm position on for some of the same reasons, and you know, I've got the ability, especially because I have so many longs on, I think, to be able to work the position, which I mean, I can already tell you with just pretty much 100% certainty with the way that I trade that if a firm closes at the same price tomorrow, I probably won't make my whole loss back in it. I almost definitely won't, but I can promise that I'll make back a percentage of it. If a firm goes down to 31 tomorrow because the market creates that pivot high and sells off, I'll work the position where I'll end up liquidating it profitably or at a minimum, and I'm about to say another term that a trader should never say, at a minimum make my loss back. Um, but the flip side is that if this market continues to correct higher and that growth is strong and this thing works its way up to $36, which it easily could, I'm gonna get totally smoked in it. So I realize those potentials in either way, but the flip side of it is, and it's frustrating because it's really also, again, I just keep saying the same thing over and over again. This is not how you should trade. If a firm gets up to 36 and I get obliterated in it, I have enough exposure to other interest rate sensitive long duration stocks that I'll still have good P&L. But you never want to, again, do what I'm doing, which is throw bad P&L at good money. Um, and I've definitely done this over the course of my career on several occasions where it's like you just let a position negatively impact you because everything else is going so well. I've made so much money recently. Who cares if I blow X amount of thousands of dollars in XYZ position right now because everything's been treating me so well I can afford it. It's really not how you want to trade. You want to trade in such a way where you're doing the right things consistently over time to maximize P&L. And again, just being blunt and honest, that is not what I'm doing here. But I'm going to do it anyway just to keep some short exposure on my books and see if I can work the position in such a way where I can, at a minimum, reduce this loss, which, for better or for worse, in some occasions has been for worse. I've had a pretty good track record of being able to work my way out of positions like this when they are against me somewhat significantly for a lesser P&L impact. But maybe I'll be doing this afternoon meeting tomorrow, and this thing will be at $35, and I'll have a problem on my hands. So yeah, so that kind of summarizes my day. It was a great day for me overall. I think it was a great day for the team. I think that we were pretty much on point, at least on being patient on the shorts, looking for follow through on our longs. I had a pretty big P&L day today, yet found myself more on tilt and more frustrated than I've probably been in at any other point in this entire calendar year. So, welcome to the trading business. That's all I got. I'm happy to answer any questions that you guys have. BK, I just want to look at that BKKT and see where it's trading at now. 38 cents. Was this another 2021 bubble darling? You better believe it. Went public January 2021. I don't know what happened here on this huge volume rip. Is this true pricing here? Yeah, I bet it was. Looks like the stock was as high as about $51. $51, 38 cents. How much money, how much destruction can the investment bankers bring to retail investors in a market bubble? That's the question. It was a good year for them. Not seeing any questions in the VTF. I probably scared you guys off. I'm seeing a couple on the YouTube though. Sorry if I missed it, but what do you think are the resistance levels to trim most part of the longs and start some shorts on the IWM specifically? Here, today's high. Rates barely sold off, so I'd guess relative weakness here. Yeah, so the IWM, $200 is that huge level. And the 21 EMA, that upper band of equilibrium, is at 199.60. The IWM has been relatively strong. So it's gotten to the 21 EMA faster than any other index has. But that is 100% the area where I'd be looking to book the majority of my long profit. So I think we've reached it today. 200 is going to be a huge spot for the Russell to get back above. That's the real prove yourself spot for bulls. So I think like the faster money that you wanted to book, you should have booked by today. You still probably can at these prices. And anything else that you're holding beyond the move that we got today, you should be holding because you're looking for the upside retracement to become a full-on reversal. So a smaller percentage of your position, 10 to 30%, depending on how greedy you want to be. From Kevin G. I found the price action in the queues difficult to read this morning until the 11 a.m. pullback long. Could you speak to how you deal with unclear price action? Do you stay away? Do you give a wider range, etc.? Sure. So I don't necessarily agree with you. I thought that the price action in the queues was fairly straightforward. We got this gap up, we worked our way higher. The number hit at 945, and then we continued higher. But that's regardless to your question. Your question isn't asking me my opinion on reading the price action in the morning. Your question is, how do you deal with price action that you find to be unclear? And the answer is I broadly stay away, and anything I do small. That's it. But definitely, if you feel uncertain about price action, don't push it. Take a step back. Flat as a position. You don't need to always be pushing trading and banging buttons. So I don't think give wider room is the right answer. I think that you stay away or you just take things smaller and with less risk. Apex Joy would like to know my opinion on PDD and ISRG. I really don't like PDD. I mean, the Temu business is obviously doing really well. This thing broke up. I like China broadly. This has a lot more U.S. exposure. I just have been concerned on PDD for quite some time that they are running a potentially almost like fraudulent business with some of the stuff that they're doing. There's a lot of potential regulatory issues around the way that they're operating their business. All of their growth comes from the U.S. portion of their work, which is Temu, which there have been many reports is full of fraud almost, and I'm just trying to use the right language here that can't get me in trouble, because I'm not accusing the company of fraud. It's not my expertise, but it seems like there are a lot of products that are the exact same as other products from other companies at much cheaper prices that could create regulatory concerns. It almost seems like there are potentially even like dumping issues on what they're doing. Forget about China dumping steel. How about China dumping products that look the exact same as the iWatch or whatever the thing is called, but for $5. So I don't like ISRG. Technically, it looks great. It broke out the other day. These Chinese names I think broadly look good. I would much rather be in a BABA or a JD, which are both working their way back towards the high of the range. $28 is huge resistance in JD. I also like Baidu. I don't have a position in Baidu. I like Baidu. Citron came out yesterday with positive comments on Baidu that I broadly agree with. You're also asking me about ISRG. I don't love trading the stock, to be honest with you. I don't like those two negative Maribozus that came in. They need to negate them in order to look good. So show me the stock is getting above like 390, and I think it starts to look a lot better. I don't really want to do anything with it while it's below that. GL had a nice squeeze. Yeah, on earnings, right? I didn't really look into it. I've been shying away from. I've been shying away from the story here with this GL. Just only so much I can absorb. From Gabriel, do you think it closed tomorrow above 200 in the IWM as they sign the bulls take back control? Yes, I do, for the IWM specifically. But I don't think that the IWM was enough. I think you need it to be confirmed by the other indexes that they are also showing that they have regained bullish control. So show me that all three indices are clearing important key levels and holding above them. Don't just show me you're above it briefly intraday. From Jeremy, can we collectively go over the biggest opportunity of the day? I didn't find much for myself today. The biggest, let me read your other question here. Hindsight trades, I'm still finding, and yesterday you mentioned that was a good thing. I stand by that. But I'm wondering, what is the best practice to practice trading setups off market? Sure. So it's a bit of what we try to do every day in the afternoon meeting is try to review some trade setups that either I was in, or you guys are always welcome to communicate any trades that you were involved in throughout the day for feedback. I don't know if Rex is here, but Rex is someone who does a fantastic job of, in our afternoon meeting, asking for feedback on a very specific trade that he may have taken throughout the day, where he'll provide the time of the day of the entry, the price of the entry, where his stop loss was, what the game plan was, how the trade worked out, and then ask for broad feedback on it. I like when he does that. Anybody is welcome on the team to do that. It's a great way, I think, for you to make some progress. But for myself today, I got so focused on kind of a firm / the market that I don't know if I have a direct answer for you on the biggest opportunity of the day, but we can take a look at some opportunities broadly that we were looking at in the morning meeting, and we can kind of review them a little bit because some of them were great. Roblox we talked about is a long above 36. $36 is a really big level on the daily chart. You can see that this was previous support here in March and April. It lost that support on April 18th. So what does that mean? What does it mean when you lose support for a stock or for a market? It means that longs are getting stopped out and potentially momentum shorts are entering the position. When then there's an event that causes it to gap right back above 36 a couple of days later, like what happened, what does that do to the participants who had changed their position on the break of that 36 just a couple of days ago? Well, now those shorts are getting squeezed because there's a big gap up past their potential stop loss, and the longs who had gotten out may need to re-enter the position, or at a minimum are not going to be selling for profit on the way up. So when you get like a false breakdown like that, it has the potential to move the stock higher. So I like this for a long today. To recap what I've said in the past, Jeremy, because maybe you're new on the team, the ideas that I present and the list that I provide in the morning meeting, they're ideas, right? They're ideas based on the information that we have in the pre-market, based on research, but they need to be adopted to what actually happens with stocks and with the market after the market actually opens. So, broadly speaking, based on everything I just explained on the daily chart, you could be looking Roblox long versus 36. It does not necessarily mean buy the second this thing opens, if it opens above 36, and put a stop loss at 36. Is not what that means. Sometimes it can mean that. Sometimes you can try that if the risk reward makes sense. But much more often, it means that you should be looking for a small time frame trade setup within the realm of that information that was provided. So broadly, we like Roblox versus 36, but when this thing opens up, it opens up with a huge gap here, and you probably don't want to be buying 36.50 the second the thing opens and putting a stop at 36. One, it's not a great risk reward, and two, there's so much extension here versus the equilibrium area that you could still try that as a pure momentum trade, or you could try it as an initial feeler trade, something like that. But for size, you want kind of a better setup. So I think we called this out in real time, so anyone could have been involved in it. But the thing pulled back to the ADMA on the daily chart, so it ticked below that 36, satisfied that upside extension from the gap, and then traded back through 36. So the preferred trade would have been to buy this thing back through 36 versus the low. You'd take on about 26 cents risk on it. It also gave, but this is a much more difficult trade because the bar is so wide, an inside and up after this bar, after the pivot, which that's also a trade that I generally really like, provided that the risk makes sense. And the risk here, I would argue, is too much. Probably don't want to buy an inside 5 and up at 36.40 versus 35.75. 65 cents risk for this thing is probably just a little bit too much. I still wouldn't fault someone if they took it, but they're really paying off from a risk perspective. The better trade was the long back through 36 versus the pivot low when that equilibrium area hit. So that was one. We talked about GM in the morning meeting today. Similar situation. We talked about long roughly, I was thinking versus the 44.50 area, but then I was thinking that maybe this thing was gapping up too big to even give that opportunity. Where did I come up with 44.50? 44.50 was an area that was important for the thing after it reported earnings on the first retracement of the stock. So you can see here the low on this bar is like 44.25 on the 6:40 a.m. bar. I actually don't think, but I'm not 100% certain, that the 44 spot 15 low at 6:45 was actually a real print down there. I think that this was more of the real pivot, but I'm not 100% sure on that. So you can see, roughly, if I give you this straight yellow line here, and then there's another pivot here at 44.50. So roughly I was thinking this 44.50 area as a spot to look versus, again, you turn to the small time frame, stock opens up, it trades down real big, it gets into that 44.50 area, it overshoots it a little bit, the low is 44.37, creates this hammer back up, ADMA not quite caught up yet, don't fully love the trade, but you could try to go long versus the hammer low, preferably technically after it closes, but I probably would prefer to do it before it closes so you can get a little bit of a better risk reward as the candle is forming. GE, we talked about a breakout through the 158 to 159 area. They opened it pretty much at that 158, immediately sold it down, and then basically created an ascending wedge into 158. If you were really aggressive, you could have gone long versus this pivot low off the ADMA. It's almost the exact same trade, but slightly different to the GM and Roblox trade that we just discussed. Or if you wanted to be more patient and wait for the actual breakout, 158, love this ascending wedge on the 5-minute chart. Again, taking the big picture thought process of on a good-looking earnings report, trying to buy the breakout through this 158 to 159 area, and then breaking it down to a small time frame where you get this nice bull wedge here. ADMA riding it, fully catching up, higher lows, equal highs, breaks out on the 1025 bar, bam, there's your execution. Stop loss, if you wanted to keep it really tight, you could use the low of the 1025 a.m. bar. It's not my preferable stop loss. I prefer to use like a pivot low on the pattern, which would either be the 1015 low or the 10 a.m. low. That's that. Halliburton was an idea. Very quickly, within 2 minutes, it was no longer an idea. Stock just failed down and faded. So that's just a bunch of examples there that Jeremy, come from the watch list from today and how to utilize that watch list and how to try to execute on the small time frames. I'm not sure, again, if you're asking me for the biggest opportunity of the day, I don't have that for you. I don't think that there was any one trade out there that felt like an overwhelming A+ trade today that, you had to be involved in, but there were plenty of good opportunities and good trades out there if you were prepared for them. So I hope that helps. And then you had a second question here. Hindsight trades I'm still finding, right? And we talked about that yesterday. It's great, I think, because you see things in hindsight enough, you learn to be able to see them in real time. But I'm wondering what is the best practice to practice trading setups off market, so assuming in off-market hours. So you can't really press buttons to practice actual trades because the market's closed, but there are plenty of things that you can do to improve your trading. I go over this, I believe, a bunch of practices broadly in the journaling class that I have in my training program classes. So if you haven't watched that one yet, I definitely would recommend it. But you journal your trades, because every time you journal your trades, you get a second experience of going through that trade. Go through that journal in detail. Go through the journaling of the trade in detail. Be involved in the trade again, basically. You can get another experience of the trade by asking about it in the afternoon meeting. You get another experience of the trade by grabbing a partner and reviewing trades. You can get another experience of the trade by implementing visualization practices where you close your eyes and visualize those trade setups as they're actually occurring. When I was a new trader, it was a very different market. We did a lot more scalping. Speed is still important, but speed was significantly more important then. So learning your hotkeys was very important. Learning your hotkeys on your keyboard. Anybody that points in, and I know because speed has become less important in the market over the course of the last 10 or 15 years, that a lot of traders more than ever on the professional side that I've ever seen point and click to buy and sell. It still blows my mind that anyone does that, to be totally honest. Like using a keypad, like the mouse to buy and sell, and clicking a thing on your chart to buy and sell. It blows my mind that people do that. So hotkeys, and to learn those hotkeys and implement those visualization exercises. When I was a new trader, they used to tell me to take a disconnected keyboard with you on your subway ride home, sit there with your eyes closed. These days, the city's gotten a little bit rougher, so I'd be careful with your eyes closed in the subway, but you might look like such a crazy person that criminals won't bother you anyway. But we were told to basically sit there with our eyes closed with our fingers on our F keys for our hot buttons and visualize trades and rapidly press our buy and sell keys to get used to pressing the buttons and to improve our trading. I never actually did that, but I took, similar concepts behind visualization and did implement it into my trading. So that's how you practice. From David L. I'm not sure what my question is. That's how it begins. All right, let's dive in here. I'm not sure what my question is, but on a day like today, when it's clearly a day to be patient and wait for a better short setup, but when key levels present themselves, do you want to technically get in for a trade, but psychologically, emotionally, you're fighting the trend? It's better to, of course, get out of the way and let the market set itself up, even if you're waiting until tomorrow. But on a technical discipline level, you're still trying to put on a trade, but psychologically, you're kind of fighting that discipline. Like, how do you distract yourself from that to avoid taking unnecessary losses by getting constantly stopped out? I don't know if that was clear. I think I get what you're throwing broadly. I feel like on one side, I'm trying to stick to the discipline that I've learned. But on the other side, psychologically, I'm recognizing that the discipline may not work today, but yet out of habit, I still want to put on the trade, if that makes sense. Sure. So the first thing that I'm going to say to you is stick with your discipline. Stick with your discipline and your rules and your trading and your risk management first and foremost. The question is, can you adopt rules for the market environment that you're describing, or the market day that you're describing in your message here, that can enable you to properly put on the trades that you're describing while at the same time still being disciplined? I think that's the root of the question and root of the answer is, basically you're telling me, like, I want to put these trades on. My discipline, my rule says I shouldn't do it yet. So my answer is, assuming that your thought process on wanting to short is correct, and I think it is at a certain point after we were patient. Like I said, I waited till 2 o'clock to short some Qs today. How can you establish trading rules for yourself that enable you to do that while still being disciplined? So, obviously what you want is that clear signal from the market that says, hey, short me now. And I don't think we ever really got that today. There's no point when you look at this QQQ 5-minute chart that says, hey, short me now, that I see. There's nothing in here. We have higher lows all day. At a certain point, we kind of had equal highs, but even with that, we still kind of had higher lows and a wedge building up, and just some simple 15-minute correction, and we broke out again at like 145 here. There's nowhere in this chart that is screaming, hey, let me short. So what you're telling me is, hey, I'm being a disciplined trader, and I got nowhere in here on this chart that's screaming to me, hey, let me get short. So I'm trying to be disciplined and I'm not shorting, but at the same time, I really want to short. Well, why do you really want to short? If there's no short setup, why do you want to short? Because looking at it, and the answer to that question is because looking at a 5-minute chart is never enough. We need to be looking at the 5-minute chart in conjunction with those other time frames. You're telling me you're going counter trend if you're shorting the Qs today. Are you though? Are you going counter trend if you're shorting the Qs? Ask yourself the question now. Are you going counter trend if you're shorting the Qs looking at this chart? Ask yourself the question again now. I just changed to a daily chart. Are you going counter trend if you're shorting the Qs based on this chart? The first chart says yes, the second chart says no. So why would you want to short a market that is trending higher all day? It's because it's not actually trending higher in anything more than just that intraday chart. Look at this daily chart. This daily chart is broken. It's garbage. This daily chart says, hey, please, I want to be short if the right opportunity, the right price comes along. So almost going back to what I was saying with Jeremy, you take the big picture idea and then you break it down to the small time frame. Well, the big picture idea, as you're getting to that 80 EMA on the daily chart, as you're getting to 505, 506 for the SPYs, says, hey, let's put some shorts on. But the small time frame there is yet to confirm it. So you either need to very specifically, and I think part of this depends on the type of trader you are and the type of account and the size of account that you're working with. You either need to say, hey, you know what, I'm being disciplined, I'm not shorting, I'm not doing anything until that signal comes in because that's what my rules and my approach said I'm supposed to do, in which case it was 100% the right thing to do nothing. Or I think if you have a large enough of an account, or, and this is a little bit more of the way that I trade, where you've got longs on at the same time and the market's getting to this area, you can say to yourself, all right, you know what, I'm going to start to build in small initially with room to build in higher on some Q short while I wait for that potential signal to come. Because sometimes the market will roll over or gap down or whatever without actually ever giving you the signal, and then you miss that opportunity entirely. But if you have the ability to manage a portfolio on massage into and massage out of positions, then you can be shorting at a certain point this uptrending market on this 5-minute chart while still being very disciplined with your trading. And that's what I was doing when I started to short the Qs. It was as simple as, I've got all this long exposure, I'm up a ton of P&L, I just caught this really big move, we're finally getting to the spot where the market should pivot down, I would like for a signal to come in, and maybe a signal can get me heavier, but for me, for my own trading, especially with the long exposure I have on, I'm not going to wait for the signal. The worst thing that happens for me when I start to build into this T-triple-Q short is I'm bleeding out some money in that, but my longs that I still have on my books are going up at a rate even bigger than that. So I'll still be making even more and more money. I'll just be making less money than I would if I never put the Q short on to begin with. So for me, I'm able to short this chart at 2 o'clock because of what the big picture is telling me while still being fully disciplined with my approach. So part of it is that you need to know yourself, you need to know your account size, you need to know the type of trader that you are, you need to know the other positions that you have on at any given point in time. That's part of it. And then, you know, part of it is based on the answers to all those questions. Does your edge require you to specifically wait for the signal, in which case discipline for you means doing nothing? Or does your edge mean that you could potentially begin to massage into that QQQ short like I did, in which case you're still within your edge? I hope that helps, David. All right. A couple more things popped into YouTube. Gabriel's asking me about CEG. Constellation Energy. I don't know the company well enough. I don't know if they're a utility or they're an energy company. I don't know that. I would like to know the answer to that. I want to think that they're a utility for some reason, even though I don't know the company well. But they are a utility. Thank you, David. I don't trade these utilities very much, to be honest with you. I did trade the heck out of this back here in October when they capitulated down there. Um, I don't really trade these stocks too much, so I don't want to give you an opinion on anything that I'm not confident on. The daily chart looks great here above this 65-75 area for the XLU. Um, but I also would feel like I'm chasing a multi-week up move if I was getting involved in it. That's XLU broadly. CEG, David York, you're giving me some more information. They're a big name right now because they're doing well with all of the AI stuff. Goldman was just writing about them. Great information. Thank you for that. The CEG chart looks really good. So it's even relatively strong compared to other utilities. You got like that. I like this like breakdown snapback pattern, which we've talked about maybe could come into like a Nvidia or something like that after its sell-off recently. So you had this little break of support, probably caused by the market. A couple trading sessions ago through 183, and then you had an inside nut that ripped this market back up immediately after. I really like that pattern. So I think that this CEG looks good. If Goldman's been writing about them, I would do your research and try to figure out exactly what they've been saying. Technically, I think this looks really great, and utilities look really great, but utilities are a little bit extended, and the market's also into a tough spot again right now, so I'd be careful on that. And the other one you're asking me about is TMDX. This is another one I've never heard of. Transmedics Groups. It's MedTech. I got nothing for you on this. I don't want to extend myself beyond my knowledge set. There's resistance at 95. There's resistance at $100. Had a good couple trading sessions recently. It's a good looking pivot low from a couple days ago. I like the inside and up. It looks fine technically, but I got nothing for you on that one. And then Steve is also asking me about my thoughts on Mara. JP Morgan analysts were recently negative because of the Bitcoin halving. What's your take on the chart? Not a crypto expert by any means. I think everyone knows here I tend to poo-poo crypto a little bit. The Mara story is interesting. I did trade a lot of this back in January. The Mara story is interesting because we saw a lot of relative weakness here compared to what Bitcoin did for like a couple of weeks, I think. And I think that was just because of a front running of negative impacts of their business from the Bitcoin halving, which, what Mara does is they're a crypto miner. So that's why they're going to be weak compared to what the price of Bitcoin is actually doing. Mara, from my understanding, and again, I'm not an expert in the space, I think has a strong inventory of Bitcoins. So even though they're probably negatively impacted by the halving event from a mining perspective, which is really their business, if that can make Bitcoin move higher, which Bitcoin's still in this not, it's still bad. It broke down on that bull wedge flag, whatever, that it was building out, but it snapped right back into the range. I don't know. I really don't have a strong opinion on Bitcoin right now at all. I think it's worthless, broadly speaking, but enough people keep buying it that it's worth something. So I don't know. Maybe they oversold it a little bit into that halving event, and now the price of Bitcoin itself has improved, and this thing tends to just have a higher beta to whatever Bitcoin does. So Bitcoin's up 1%. This thing's usually up a few percent. And they oversold it, probably shook some people out and snapped this thing back up. So that's probably it. JP Morgan analysts were negative about it. The sell side analysts are a bunch of jokers for the most part, so I don't overly care what they have to say about it. But yeah, another one I don't have a strong opinion on. But I appreciate you asking. All right, gang. It looks like I got through all the questions and comments in the virtual trading floor and in YouTube. So I'll wrap it up. Hope everyone had a good day today. We'll assess things in the morning. We'll see how we gap. We'll take it from there. So have a great night.